Salil, you talked about discretionary spend and you said that at this point in time it looks like pretty much around the same levels. But are there any optimistic signals that you're picking up from clients at this point in time? Because while geopolitical tensions are escalating, the US markets and the US economy continues to be strong, continues to be buoyant. So are you picking up any indications from clients on doubling down perhaps or picking up the pace as far as discretionary spends are concerned?
So there, one of the comments we made again during the earnings time, which holds, generally the discretionary spends approach looks similar at the end of Q4, start of Q1. We'd also said on financial services, we see a little bit more activity than we'd seen in Q4. And the same thing is visible to us today. That coupled with what we see people working across the board on cost efficiency, and then in a smaller way with generative AI, is what we see as the outlook today.
Okay, speaking of outlook, let's talk about M&A. You did an acquisition in the engineering services space for 450 million. Potential M&A targets, will you be looking at Gen AI capabilities much more, given the fact that that continues to be an ambition that you want to bolster? Explain to me what will drive the M&A strategy for you from here on.
So there, we have done a phenomenal acquisition in engineering services. Actually, we did two, a smaller one and a larger one. Both are very strong. The larger one focused on automotive work. This is a company from Germany, but working across the world. It's an exciting space. We already have a very large business in engineering services, and we see good traction for growth. We will continue to do this. Environment is a good environment for us to look at acquisitions. We continue to have a strong balance sheet. We generated 2.9 billion of free cash last financial year. So we are well set for that. We're looking more in spaces which are related to that. So for example, we look at engineering services, we look at some other SaaS areas, we look at geographies as well. There are various geographies around the world which are doing well, and we're looking at those as a expanding footprint. On generative AI, there is not so many companies which are doing services, so there's not so many areas to look at it, but if something comes, we will of course look at that.
Salil, you said that this is a good environment to go shopping, and you are looking at acquisitions, to add to your capabilities as well as enhance your geographical penetration. Are we likely to see, deals close in this financial year? Are things looking hot on some potential targets that you are looking at this point in time? And what's the appetite in terms of size?
So there, again, as you've seen over the last several years, we've done small acquisitions which have done very well for us. This one is a similar one, slightly larger. We are open to doing things which are in that type of a size range. There's a lot of discussions, but with acquisitions, you never know till a lot of the parameters come together, including a cultural fit. So it's like difficult to predict what it'll look like, but we're definitely in several discussions and keeping an open eye given the macro environment for acquisitions.
Okay, an open eye on acquisitions, but let's also talk about large deals, Salil. Robust at 17.7 billion the last quarter, up 80% year on year. And you hope that the benefits of that will accrue to you in FY25 as well. How confident do you feel about building on that momentum?
Well, that's going phenomenally well. So what that does is it gives us a very strong foundation for this financial year. It was the largest of large deal values that we've had. A net new, or the new part of it, not just renewals, was very high. And most of those deals were on cost and efficiency. There were some on digital, but mostly cost and efficiency. And so that is the sort of market environment we're seeing. What that means is we believe we are very well positioned to work with clients, even when they want to consolidate partners and they want to look at cost and efficiency, because We have automation, lean, which has been working extremely well. And now you add a little bit of the productivity part of generative AI, that gives an added boost to the whole business. So we feel strongly the pipeline is on cost and efficiency pretty good, and we will continue to see good traction on that.
Okay, a quick word in on margins as well. Salil, the margin guidance stands at between 20 to 22%. But if I could borrow from TCS and ask you to give us a margin beacon, for the medium to long term, what could we expect, especially with all the changes that you're bringing about, not just in terms of cost optimization, but also in terms of the opportunities that you see?
So there, I think you talk about a very critical part of our business. We launched a margin program inside the company about a year ago, and last financial year we already see strong traction. It's got 5 different areas focused on. Within that, there are 20 initiatives. Each of those are moving well. So we feel very comfortable with where that program is, and that will support our underlying margin ambition. In terms of the beacon, as you know, we don't have a view that we share externally beyond the financial year, but we have very high ambitions inside to keep on working on that margin program as we go through the next several years.
Well, I know that you haven't held out a number, but since you talk about having a very high ambition on the back of the work that's already being done, give me a range. What is the kind of ambition that you have set for yourself internally? What could that potentially look like? I'm not holding you down to a guidance, but what's the ambition?
So internally, we will not share the number externally, but internally we have these levers, and the way this program is working, our CFO Jayesh is driving it personally, and we have buy-in and drive from a top leadership in making this happen. So my feeling is that this is going to give us a good set of results over the next several years.
Well, speaking of results and that guidance that you've been held at, Salil, we're pretty much through the half of 2024, and you, of course, have a grip and a pulse check on what's happening with your clients at this point in time. The possibility of being able to deliver on or better on the guidance held out, is that looking likely at this point in time?
So there on the guidance, we are very clear with the guidance was 1% to 3% on a constant currency basis, the growth. We will, of course, relook at the guidance at the quarterlies at the end of it, so we'll come to it in a few weeks. But at this stage, we confirm the guidance at 1 to 3%.
What gives you comfort, or what gives you confidence today, Salil? We are, of course, talking about many of the uncertainties that continue to prevail, as well as some of the headwinds. But where do you see the tailwinds at this point in time that could perhaps get you to review your guidance higher?
So what gives us comfort for the 1 to 3% guidance really is one, the large deals, which was really exceptional. So that gives us a foundation. Second, we see the discretionary spend has remained about the same, which has not become worse, which gives us some comfort. It's not changed to positive, but it's the same level at the end of Q4, start of Q1. And then a little bit on financial services that we saw the movement to a small, better movement, which gives us a positive. And finally, generative AI, where we've completely transformed the company. So as that starts to pick up, whenever that happens in our revenue, that gives us some support.
So again, and I know that you're probably not going to give me a number, but when do you expect that inflection point to be, when you start to see the work that you're doing on generative AI kick in as far as revenues are concerned?
So that, Shreen, is not that easy to have a date on, because there's a lot of global factors that will play into it. Essentially, when will large organizations start to spend on digital programs again? And that part of that will be spent on generative AI transformation program. Right now there is early projects which are small projects. So it's difficult to say when that will happen, but We know that all of these are cycles, and as the cycle plays out, we will start to see some benefits.
You know, Salil, you said that Infosys is transforming itself to be future ready, to be ready for a world where generative AI becomes much more significantly adopted, that is. In line with that transformation, what about management structure? What about people coming in, especially at the senior level? You saw a plethora of senior level exits. Are you looking at, bringing more people on board? Are you looking at changing structure in keeping with the kind of transformation that you envisage?
So there, we've been extremely fortunate. We've had a really strong leadership team. So we have all of our leadership positions filled with people from internal movements. And it's quite unique if you look at what we have. We have individuals in the leadership team who work with Infosys for 15, 20, 25 years. In fact, yesterday we celebrated someone who's finished 20 years in the leadership team. 2 weeks ago, it was 25 years. These are people who have worked with each other through those years. And a company like ours, in an industry like ours, is very international in different places. So that ability to work as one Infosys, to know each other, makes a huge difference. And I think it's a big differentiator with anyone else who has to build teams by hiring from 6 different companies at different levels. And that is something that's maybe not well appreciated, but for us a huge advantage. And we think that's a benefit that we are playing out pretty nicely.
Salil, before I let you go, I want to come back again to the jobs issue and to the workforce issue, because many companies at this point in time, you can call it right-sizing, downsizing, reorganizing, so on and so forth. And many are using AI or generative AI as perhaps the reasons for why they believe that they are right-sizing, downsizing, reorganizing. Is Infosys looking at that? Is that a possibility at all at this point in time?
No, we are not doing any of that. In fact, others in the industry have done that. We've been very clear that that's not the approach we are taking. In fact, my own view is for large organizations, all technologies will coexist. We at Infosys are very strong in generative AI, and over the next several years, we'll have more and more people joining us who become experts in generative AI, and we will be serving the world's large organizations. So for us, the ongoing view is an expansion, both over years with clients and with the number of employees.
Well, I look forward to hearing numbers from you in terms of what that transformation will finally result in, and also the work that you're doing on generative AI, when that is expected to kick in as far as revenue contribution is concerned, and how much. But Salil, Parekh, always a pleasure. Appreciate you joining us here on CNBC TV18 with a deep dive into Infosys' AI strategy as well as the outlook for the sector going forward. We will take a break here on CNBC TV18, but a lot more coming up. Don't go anywhere. We're back in a moment with more.